right, so glad you could join us today. I'm Harlan Bowling with you. And in case you missed it this morning, USDA did have a couple flash export sales to announce. Maybe we can review those before we get into our daytime trade here. Okay, so what we had was a sale of soybeans to China. It was 204,000 tons, and we had a sale of 143,637 tons of corn that was earmarked for Mexico. Let's see what the trade thinks about that. Was it built in or was it not? Let's go to the corn board first. Our quotes are from Bar Chart, of course. Well, corn is yawning at the news. December is down a penny at 463. It didn't get any bounce whatsoever out of that. Let's look at soybeans this morning. Of course, soybeans were higher overnight by about 7 cents. Well, January now is up 11.5, so it seems to like the news. 13.59 is our last trade, and that's almost on the high of the overnight and early morning range. Meanwhile, let's take a look at our wheat market. Let's go to Chicago first. December down 6.5 at 568 3/4. Well, I tell you what, this wheat market does not like working without a net here. You have December, Kansas City down 5 1/4 at 634 3/4. And in Minneapolis, you have the December contract down 3.5 this morning at 727. Can we find a plus sign in cotton? Yes, we can, but it's not overly terrific. We have December 28 points higher. We're at 77.60 per pound right now. Well, I'm glad to be joined by the one and only Dewey Strickler of AgWatch Market Advisors. Now, he's in Franklin, Kentucky, in the southern part of the state. Soybeans getting a little bit of a boost this morning. Corn just cannot seem to get up off of the mat. So what's the problem here? They both had overnight export sales, but only one seems to really react to it. How come?
Well, the problem in corn, just very simple, 2.1 billion bushel ending stocks. It's no more, no less. That's it.
So now what? What do we do? Do we just stay flat into next year or what?
You have a very strong seasonal tendency, Marlin, for corn futures to go lower here until about the end of December, first week of January. And with the ending stocks where they are currently, I don't see any reason to deviate from that pattern.
It almost seems like in corn, about the only thing that's going to happen, unless something dire from the outside occurs, about the only thing that's going to happen is for time value to erode in options through the wintertime, because the market just seems to go sideways here.
That's exactly right, because, really we do not have much input, any news in here to really affect the option volatility like we do in the spring and summer.
Well, what do you think of the soybeans here? I mean, are they acting pretty good in your book?
Well, when I looked at my patterns here on Thursday, Friday, it showed that we could probably see one more small leg higher here. I think that the market is really reacting more to the weather in Brazil than it is to exports here right now. One thing you need to be aware of, and that is there's a very strong seasonal tendency for exports in beans to peak here in November, especially around the middle of the month. And when they do, your pace of shipments generally dries up to about 80% going into the end of the marketing year. So that's something that I don't think we have can look forward to happening here, but it will likely happen here. So I think once a little weather scare is done here, we'll be looking at a peak here in beans. And also remember, too, we talked about this before, there is a head and shoulders topping pattern on the monthly continuation charts that is still alive and well.
Okay, so yeah, that's very interesting. What are you making of the wheat market and its inability to get off the mat here? Let me bring up a 6-month December Chicago wheat chart here. Any patterns there that give you any kinds of hope at all?
Well, wheat generally works lower here until about mid part of December. And right now, the problem we've got in wheat, Marlin, we've had for quite some time, and that is exports are at an historic low. I'm surprised that USDA did not lower them. In the last report, they did not, but they certainly had room to do so. That's the problem you got in wheat, is that we just simply got too much competition, and our exports are sluggish.
I see where crude oil trade is a little firmer this morning. West Texas crude now up 81 cents. We're back up to $77.98 per barrel, even though it's off of the $90+ mark that we had here not too long ago. But technically, does it look like it's ready to maybe reverse out and go back up or not?
I think it will here shortly. It looks like short term we might still see the crude oil down just a little bit more here, possibly.
Okay, well, we'll pause here, and Dewey, we will open up our livestock trade in just a moment. Don't go anywhere. We'll be right back. What do you say we go ahead and open up our livestock trade here on a Monday morning? All right, on live cattle, here we go to the big board. Our quotes from bar chart show December is 45 cents higher. Look at that, 174.62 this morning. February now 30 higher at 174.95. Interesting, the gains get lower as you go out in time. So maybe a little sign of bull spreading activity taking place, maybe. In feeder cattle, well, we have January now up $1.02 at 227.45, and March is up 65 cents. We're at 229.27. Make it 229.35 right now. So now that would put us up 72 cents. So a strong start on the cattle market here. On the lean hogs, well, they're higher too for the most part, not everywhere, but you have December up 67. We're at 72.57 per hundredweight. February up half $1 at 76.07. May is kind of dragging its feet. It's unchanged right now. So let's go back to Dewey and discuss everything higher here on livestock to start out the week. Dewey, I guess a lot of folks out there in the country would say, well, it's about time. So what's going on?
Well, when you look at the beating the cattle market has taken here last week and recently here, Marlon, I'm not surprised we get a rebound here. I don't think it will last. I think the cattle market, the rubber has finally met the road here. Consumers tapped out. By looking at the sell-off that we had here last week. When you look at home mortgages, 8%. And you're looking at personal savings rate at just historic record lows here. Consumer spending at record. Credit card interest over 20%. It had to come at some time, and it looks like it has.
Oh, come on, Dewey. The Dow is still over 34,000. Times can't be bad, right?
Well, the Dow is in a different ballgame altogether here. Dow's really being supported by the big money, nothing more than that. But, Dow in time, yeah, it's going to have its day too.
I do want to take a look at, with that in mind, let's look at gold, see what it's doing right now. Not much. December gold is just up 40 cents. It's at 1938.10 per troy ounce. So anyway, that's the way things are looking over there this morning. Very, very quiet. Interesting trade to open up the week. Dewey, thanks for the time. Dewey Strickler of AgWatch Market Advisors with us from Franklin, Kentucky.